Yep. I think, yeah, I guess we'll start because it's already 5 minutes and some of you have joined. So I think it's good that we can start and others can probably then go through the recording if they're interested.
Perfect.
Okay. So I think most of us have, I saw like in the poll, I was just seeing the poll. I think most of us have voted between like 27 to 30,000, 27,500 to 30,000. And initially, I had also voted for that, but just to, keep some fun and something different, I then changed my vote to, more than 30,000. Um, and then there are a few members who have also voted for more a flattish kind of a market, which is between 25,500 to 27,500. So let me go first. I mean, what are my reasoning? So, whether it is like 29,000 or 30,000. But I think what I am kind of bullish on is one is the overall funds, right? So if you see the funds which are, the cash which is available with the domestic mutual funds, it is at an all-time high, right? So typically the ratios are, between 2 to 3%. Rest of it they generally deploy in the market. But right now it's anywhere between 4 to 5%. Like average is 4 to 5%. And some of the big names, like for example, SBI or Parak Parik, um, some of these funds are as high as 15 to 20% cash, right? So they are waiting for the right opportunity, or they are sitting on such high cash and waiting that the market will come down, but hasn't come down, right? So I'm very optimistic that any, like even a small correction, they will try to jump in and they will take the market up. So the possibilities of correction, or even minor corrections, uh, even if they happen, I think the rally will be faster. And then to add on to it, if we see the foreign investors, like the FIIs were mostly selling till now, but over the last 1 week or so, we also seeing FII interest, FII buying happening again. And again, with the Fed rate cut kind of expected in December, we'll see these funds flowing into the emerging markets. And which better market than India, right? Because again, if you would have seen the news article that I posted today, India has posted the highest GDP growth amongst all the economies, right? And even like for India, it was like after 6 quarters, this was like the highest growth, right? So that's the optimism, and that's there. And then I also feel that most of the negatives have been kind of factored in. I mean, of course, so there can be a surprise geopolitical event, or something which may happen. But I think most of the negatives have been factored in, while some of the positives may not have been fully factored in. Like for example, the GST cut which happened at the end of the second quarter, the impact will now be seen in quarter three earnings when we get that. And if you see the quarter two earnings versus quarter one, they were already better at like almost 10 to 11% better versus the previous quarter. So we'll see even better earnings. So the earnings will of course increase next year, and that's, I mean, even a simple PE, even if we keep the PE constant, we will see that the market should go up significantly. And yeah, so the GST is there, one thing. And the second is, I think, the tariff deal. The tariff, even when the tariffs were applied to India, we did not, I mean, initially there was a lot of fear, but we did not see that full impact. Even like, despite the tariffs being there in August and September, the results were pretty good. So now with the tariffs reduced and hopefully a trade deal happening, these will only improve. So overall, I think, I mean, if I have to summarize, positive sentiments, and the data is positive and the funds are there. So I mean, I'll be disappointed if the Nifty doesn't touch 29,000, 30,000 by the end of next year. Yeah. Anybody else wants to add anything, or maybe give a counter view on this?
Well summarized. I hope it happens because it will be good for everybody's portfolio. But actually, I voted for a flattish kind of a market, 20, between 25,500 to 27,500 level. My basic reason was, if the market has to go extremely bullish from here, then if it first needs to take out one important level, which was an election day result low, which was at 21,200 something. I don't remember the level, but there is a huge liquidity there. Once this liquidity gets taken out, then probably market will be ready for its next course of bull rally. So before that happens, that level gets taken out. The most of the retailers and people who have started investing after election day, they won't. They will not get trapped. So that is my rationale behind market to stay either flattish, or it may correct a little bit, and by the end of the next year it will remain at the same level what we are today.
Hmm. Interesting. Yeah, I think one point which I kind of like remembered now when you were talking about it, Anurag, is if you see the previous rally, the rally which happened in 24, there were a lot of, if I may use the word, you are the expert, but there were a lot of fair value gaps which were there. Like there were like pockets of range which were like just there were no trades which had happened during in those numbers. But if you see
Mm.
this rally, I mean, at least what I can see is it has been very like slowly and steadily moving up, and even when it went up, it corrected, took out the previous whatever gaps were there. So I don't see many gaps. So yeah, I mean that's another thing which is kind of pointing that the breakout is very near, if not already the breakout is.
Mhm. Thanks for pointing this out, because normally what happens, when the market is on the verge of breakout, there are a lot of gaps there. Thanks for pointing it out, because market does not want to give time to people who are just sitting on the fence, and they are still not decided whether to go for whether to invest in the market or not. Market does not give time to them. It will create such huge gaps that they will miss the rally.
Yeah. Okay. Anybody else? Any other pointer? I was surprised that no one was like gave a very bearish view, saying that there will be a correction, and we are this level we had reached earlier also, and then there was a 2,000 points drop. So I guess no one voted for that. But yeah, anybody who wants to add anything on this?
Uh, Mahurkar this side. So I want to add one thing here, like see, if we consider the monthly chart, the range would be basically between 350 to 500. Okay, uh, usually. Okay, either in the upside or downside, or in the what you call sideways. Okay, but now we are already at the peak level, and at peak level, to break out from there, it has to have a very, very, strong fuel, and strong fuel is basically FII. Okay, even with domestic also, we struggled to cross to 26,000, right? Right now we just crossed, and we are just staying at the same point, almost to 50, 20, 50 points less than the all-time high, earlier all-time high. So what I am believing is, like, because this is going to be a December month, and as of my knowledge, December month will be, the FIIs will be little silent in the December month. So once they come in the second week of January, I can see some, you know, full bullishness. Currently, I'm seeing it can be little, sideways only. Just little small spikes can be upper side, may not be downside, but upper side spikes might be coming for 1 or 2 weeks, 1 or 2 days. But it's going to be sideways is my analysis.
Mm.
It's what I want
And
to
what
add.
is your view for like this, like more long term, like 12 months from now? What do you feel?
Yeah. Actually, see, Nifty, whatever market it is, it has to go up only. Okay. But it depends on the fuel and the global cues and FI, DI data and also uh, local policies as well as the foreign policy, geopolitical policies. So I feel it will definitely go. Okay. Post January, third week or fourth week, we can definitely predict whether it is going to be very much positive next year or it is going to be, sideways on like 2025. Okay, 25 is in fact, slightly bearish only. Last 2 months, sorry, last 1 month, it has taken little positive side. So
Yeah.
we can't
If you see
predict whether
November 24, like someone who would have entered, let's say in October 24,
mm,
uh, they would still be probably sitting on like,
yes,
a flattish kind of a
Ah,
yes,
return
yes,
or
yes.
even maybe a negative return because, the Nifty has not done anything in last 1 year.
they
So
will
yeah,
get cost at this point of time.
What trading? I think we need to
yeah,
check the
great.
technicals
So
also with the what do you call it, uh, monthly charts and all. Then we can definitely find out.
I think we have Rajesh also, who's the macro expert. So Rajesh, what are your views?
Uh, I sort of agree and disagree with everyone. And look, the fact is, when you look at fundamentals and if you want to do fundamental investing, you should not be looking at the Nifty 50 or even the Nifty 100, right? Because, nobody buys a Nifty for the long term. You buy individual stocks for the long term, right? So it's a very different game. So that irrespective of flows, which is, FII flows or DII flows or retail investors, the fact is that there is enough people out there who are still not participating in the market, right? I mean, just take this number. We only have 4.8 crore active demat accounts compared to the 146 crore people who showed up. We have 60 crore PAN holders. So out of that, only less than 10% of them actually are demat holders. So the amount of flows that can come into the market just domestically is large enough. Yes, aversion from FPIs are a problem, is a problem rather. That I think will eventually get sorted out like Rishabh was saying, once we have a resolution on the trade thing, once we have a few reforms in place, those things will sort themselves out. So yeah, like fundamentally, if you're looking at it, don't bother about Nifty being at 26,000 or 29,000. Look at individual stocks, individual sectors. I mean, I don't know whether you guys saw the GDP numbers that came out today. This is for Q2, which is June to September 2025. We grew at 8.2%. And not surprisingly, actually, very intuitively, industry grew at 9.1%, which is a lot of front loading that happens before the festive season. So things are not so bad. In fact, no, the surprising thing about the 8.2% is that even RBI expected only 7%. So RBI had an annual GDP forecast of 6.4%. After this number, they've revised it to 6.8%. So lots of good things, a few stark bad things. I agree on the point that look, the global the global problems will come to haunt us at some point of time if they indeed blow out. I guess you guys are all aware that the correction that happened in the US was mostly because there was a lot of concerns on the AI investments and so on. That has sort of recovered because everyone expects the Fed to cut next week rather, and sort of bail out the market. So, these things will keep changing. And the fact is, we don't have any AI exposure at all, good thing or a bad thing. So we have lots of things going for us. So no reason to be bearish stock markets. Nifty at 29,000, 26,000, I don't know. And frankly, being a technical trader, I'm not really bothered. Sorry, that's about it.
Yeah. No, Rajesh, I mean, fair point, but it's just more of a sentiment kind of a gauge, right? That, I mean, I get your point that, we look at individual companies and we invest in individual companies, but it kind of these 50 companies represent the biggest companies in India. So it is kind of also like a sentiment analysis, right? That is, what levels Nifty is at and how it is doing. It kind of gives into that sentiment. Yeah. So yeah. Okay. So what you are not going to predict? That's what you're saying, right? You're not going to predict, but you are bullish and you are also in that boat, right? That we should do well for the next 1 year.
If you force me to predict, I would say 29,000 also. So.
That's a good one. Yeah.
He has a
Okay.
very interesting
Okay.
perspective regarding that DMAT thing. I mean, India's DMAT account users are only, it's the penetration level is still very low. So there is still a lot of hope, a lot of scope that numbers will grow up. And as the more investment come in DMAT, then obviously we'll be more seeing higher numbers in Nifty. That was a very interesting perspective from Rajesh.
Yeah. Yeah. Sure. Okay. Anybody else? Anybody else has maybe a contra view on where the Nifty would be?
I think Nifty would be my guess is it would be again a flattish kind of year. One reason I think is because it has been a rally of passive investing for the last 4 years. Lot of retail investors made good money without doing a lot, and these are investors who have not seen any big downfall. So even a small, I think, shake up in the market, a lot of people will get out of it. So even if new funds are coming in, there will be a lot of redemption as well. So I am assuming now last 4 years have been like for passive investing, but going forward, active investing will be like more like stock selective kind of investing will be the winner kind of. You need to be very careful with the stocks you are selecting, and just buying the index and sitting on it won't work, I think, that much. That's my guess. Yeah.
Okay, that's an interesting perspective. Yeah, I mean,
Excellent.
kind of, yeah. Yeah, Rajesh, go ahead.
No, I was saying it was an excellent point.
Yeah, yeah. I mean, I would say I like 70 or 80% agree, because again, as I said, right, it's not that it has only been like a fairy tale kind of a journey. There have been bumps. If you see last 1 year, as I was saying earlier, also last 1 year, I think there has been hardly any return. So people who get scared easily, probably they would have also kind of cashed out. And even the domestic funds are sitting on highest amount of cash. So again, I feel that even if there are minor pullbacks, they will jump in and they will kind of support the market. So yeah, that's where my optimism and my bullishness is coming from. Yeah. But yeah, interesting perspective. Thank you for that.
I think because like since we are discussing Nifty, because it's just an investment option for us now, being the world open to invest, we should more be discussing also about, if not Nifty, then what, like 2025 Korea has given given amazing returns, right? So is there any market which we see is kind of US already, I think, is a lot of valuation risk in US, but is there anything else we see which will be kind of better than Nifty because we are kind of not married to Nifty, right? So we need to just make money. It can be anywhere else as well. So maybe other asset as well, or yeah, anything. So if there's anything, any indicators which we see, because so something which I was reading earlier about Brazil seems to be a very kind of start of its kind of explosion, and assume like it's kind of expected to rally a lot. Brazil, South Africa, those kind of markets. So yeah, means if there is anything that kind of indicator, we can kind of look at that as well, right?
Yeah, again, yeah, interesting point. I'm not very sure, but I also read somewhere that like Japan over the last 1 year has given like some 40-50% kind of return. So yeah, I think that's another perspective that you can also look at other markets. Again, I don't know for us as resident Indians how easy or how difficult it is to invest in those markets, but yeah, I'm sure there are like fund of funds and there are opportunities that can be found out if someone wants to really invest.
No, there are ETFs for every market in US. So if we can invest any through now, US investment is easy, right? So those ETFs we can invest easily. There's like EWZ, DXJ for Japan, Korea, there is KDEF. So there are many basically for each market there are ETFs. So we can kind of look at them.
Just one add-on regarding the US ETFs. Actually, I was tracking them from last 1 year, and honestly speaking, I feel like they are overvalued right now. Like especially in India, like people are just rushing towards it, and agar bubble fatega, to it is going to impact that those ETFs a lot.
So Surya, these are like US based ETFs, or these are what
Correct.
Rakesh
They
was saying is US ETFs but investing in other economies.
No, these are US based ETFs. So basically, they follow S&P and Nasdaq. And yeah, so I can give you the list also. Actually, this was the news for this year. Wealth Magazine, Economics Times also they captured it in a very detailed manner. Just be on the call, or by the end of this call, I'll forward that article to you guys. Maybe you guys can have a look on this.
Yeah, sure. You can share it on the group
Yeah,
so
I'll
that
do that.
everybody can read. Yeah,
Yeah, I'll do that.
great. Okay, any other perspectives?
No one is bearish. Come on, man. Everybody will be bullish. So if everybody
I'm
is
getting
buying, who
scared
will
now.
sell?
If everybody is bullish, then you have to be scared, right? There is a saying that if everybody is buying, you have to sell, and if everybody is selling, you should buy.
Anybody else who wants to share his view about the next year Nifty performance?
I think not. So yeah, I guess great session, guys. Thank you for joining, and maybe we can continue it on the group also. Like if somebody has something to share related to what we discussed today, we can kind of share it on the group. And yeah, I mean, for me, it was a good break from what like routinely we discuss every day in the call. So maybe we'll think of more such topics. It's always good to hear different perspectives and understand the thinking of everyone. So it was great for me. I don't know about others, but yeah, you can give your feedback as well. And yeah, thank you so much
Yes.
for joining and happy Friday.
Yeah, the happy Friday, everybody, and thanks, Risha, for conducting such beautiful and different session. We hope these kind of sessions will continue to happen in near future as well.
Okay, thank you so much. Have a good day. Bye bye.